everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first time, we have to go through and do this wonderful disclaimer. If you've been with us before, you're aware of it. And if you are new, please take a screenshot of it, take a look at it, and read it in depth at your at leisure. A couple things that the powers that be want me to highlight is, number one, we are not registered to give it individual investment advice in the United States, and any prices that we're talking about are assumed to be in US dollars unless noted otherwise. So those are the two primary things, but don't want to make too light of it. Take a moment to peruse through it when you get a chance. For those of you that are new with us this week, just to give you a bit of a rundown of the format, we take a look at the market, see where things are, what we've accomplished since the previous week, where things are likely to go from here. Then we go to our website, take a look at any alerts that we may have closed for our subscribers over the past week, and go through and give you an educational peruse of those from our technical analysis. And then we'll review previous case study considerations that we've identified the previous week or two with TradeFinder, and then we'll go through and see if we can identify any new ones for this week. And then with whatever time's left, we'll answer questions. So feel free to ask your questions throughout the course of the webinar. I'll take questions at the very end, so please understand that I'm not ignoring your question, and you don't have to wait till the end. If you want to ask a question during the time, go ahead and ask it. And also, please understand that there's limited time at the end, so I may not get to every single question, but I do my best to get to as many of them as possible. Wanted to give ourselves a little bit of a pat on the back. We just finished a really banner month for our subscribers at Elliott Options. Nice move to the upside in our equity portfolio as far as our equity, I guess is the best word. But we also closed out 11 consecutive winning trades in the month of August. So pretty excited about how things are going right now. Interesting thing is, where do we go from here in the markets? So with that, let's go ahead and take a look at where we are in the markets. And you can see we did have a move to the upside. The futures at this point in time are up another 10 points. So we're marching towards that 362 level. If you watch the last video on YouTube on the S&P, we went back and talked about how if you look at the super cycle within Elliott Wave going back decades, which is pretty interesting, 362 is the high for a super cycle. So that's a pretty significant point of resistance. And then based on weekly and daily charts, we had 4 different patterns that gave us that 340 plus level target that we struggled with for a while, and then we've broken through that. So at this point in time, it looks like we're headed there. I did want to show you the extended level of that zigzag that we had talked about, because we just kind of blew right through that without really, I mean, we closed right on it on the 26th, and then traded a bit of a doji the next day, and then just powered on to the upside from there. And so the next fib resistance level on that zigzag is 138.2, but I think that it pales in comparison to the wave 3 high on the super cycle at 362. That's the primary target that we want to look at. Go watch that YouTube video if you're not familiar with what I'm talking about, that we recorded. We referenced it in last week's video, but we recorded the outlook back in January, pre-COVID, posted it in February before everything dropped. And so you'll see the targets that were hit, that were right on the nose, which has been pretty fascinating. So there's that 347 level we went through, and then I'm just going to go ahead and take this off because I just think that's of lesser importance now. And we're moving to the upside, and this is the thing that worries me when we have this kind of a 45-degree angle. That's my favorite. If you watched any of my recordings over the last few months, you've heard me reference that numerous times, that I like when the market moves in a 45-degree angle. But when it does that and then starts to go a bit more vertical, that's when you start to think, okay, there's some sort of a correction coming. And then here's the big tell. I'm going to put the DMI on there. That's just flashing warning signs all over the place. You can see, I mean, it's strong looking, and it has been strong for a while. But now the ADX is trading over 45, nearing 50. We're outside the positive directional indicator, even though there's good separation here. So it's telling you that was a strong move, and we're aware of that. But now it's like, okay, the strongest part of the move is over. It doesn't mean that we can't go higher, but this is the point where you want to start taking profits, being careful, paring back long positions, all those things that we've done for our subscribers. And so just keep that in mind. This is not going to be a run that lasts forever. At some point in time, we are going to have a corrective move. And if the super cycle chart is accurate, then we're going to have a decent sized correction coming up. The Federal Reserve's meeting in September is worth watching. Boy, if they disappoint at this point in time, because I think a lot of another round of QE from the Federal Reserve in September is priced in. I think some sort of stimulus package from Congress, even though they seem to be at a bit of a stalemate, is priced in. If any of those things disappoint, that could be the catalyst to start the downward move. But this is a point in time where you want to start being really, really careful with new long positions in your portfolio. So that's there's really not a whole lot else to talk about as far as the market itself. So we'll leave it at that. I've got several things to show you on our website as far as positions that we have closed out for our subscribers. And this is one that I wanted to focus on. This one we closed out last Wednesday, so the day after our last TradeFinder. And I wanted to show you this because we get questions on this, especially when we get a new subscriber and they're looking through our trade list. And we post everything. We're as transparent as anyone can be. Every single alert is posted, open to close, any adjustments in the middle. And you can see there were several adjustments in here, although it looks more than it is. You know, if you close one thing and out and roll it out, that's really kind of one adjustment, but it shows up twice because of each different leg that's being changed or bought or sold. So it's not quite as significant as it looks there, but we just list out every single thing that we do. So we don't want to create any sort of guesswork or anything. It's all right there for you to see. And as you look through this, look at the entry of this. So this is on Home Depot, and this is going back a ways, but it was in our impulse strategy, and the trade was originally entered on February 10th. So let's take a look at the chart. Now this, I chuckle about that because it's right before the COVID thing came out. You know, it said in our outlook that COVID was a potential black swan, but at this point in time, there was no serious consideration given to all the hoopla that has occurred since, and now I'm sure you've seen the CDC reports and all that stuff that's been in the news over the past few days on what's the real number of COVID deaths, etc. I think, personal opinion, and I'm not trying to force my opinion on anybody, personal opinion is there's a difference between deaths caused by COVID and deaths of people with COVID. Does that make sense? You know, if you died of something else but you had COVID, is that really a COVID death? Or was the death caused by COVID? So I think that's where the gray area is, and that's where all the argument is coming in now as far as how many real deaths have we had. Anyway, here was the chart pattern. Everything looked great. With the wave 5 moving to the upside, we had just broken to a new high. The DMI was showing that we were starting to kind of regain strength. Not a super big turn to the upside, but a little bit of a wiggle to the upside. So everything looked good at that point in time. And then you know what happened, all hell broke loose. And so we had the big move to the downside. So through the course of time, we made some adjustments, and then here in August, we really got serious about the adjustments, because that's when the chart pattern started to show up. So you can see there was a little bit of a gap here between April and July as far as the adjustments. But when we entered these July adjustments, then they came to fruition in August. And because of this little gap here, we're just waiting on the charts to set up. You don't want to force anything, let it come to you. We don't want to go through and have alerts just to fill people's inbox. We want to make sure that we are following our technical system and that we send out alerts when the system tells us there's a trigger and it's time to send an alert. So if we have to be patient for a little while, then we do. And I talk about this all the time, the importance of patience in trading to become a successful trader. You have to be patient. Let the patterns come to you. Trust your analysis. Find a system that you trust, and then trust that it's going to work a high percentage of the time. Hopefully you found a system that works a high percentage of the time. We have. And so sometimes that trust gets tested a little bit, but you have to have the resolve to power through it. And you can see what happened here with this close of the August trade for $865. And then we made another adjustment, and we just closed this out here. So let's go through this August and show you the chart here. You can see that we had a big move to the upside within this wave 3. Now the ADX was starting to get strong. Okay, so we went ahead and took that gain. That's where that profit came from. And then we bought back the short calls of that next spread. And then at this point in time, we had a little bit of a pullback from that overbought condition. Now, stocks can stay overbought or oversold for a period of time. So you don't want to miss out on a run because an overbought condition can last, but you don't know when the condition is going to be recovered. It's usually fairly short term, but you want to be a participant of it. So with that pullback, we went ahead and added over here 2 more calls to the calls that already existed. So we bought back the short calls, we added more calls, and that turned out to be the home run type of a position, if you will. And then we broke to this new high, and that gave us the opportunity to close this position out. And I'm going to show you the numbers here in a second, but look where we are now. The ADX is screaming overbought, very similar to where the market is right now. I think you would agree that that DMI is very similar to the DMI on the SPY that I just showed you, where the ADX is nearing 50. It's well above the positive directional indicator, and just by anyone's analysis of the DMI, it's just telling you, be careful, it's overbought. So you get a new high, but very overbought conditions. Go ahead and take your profits. And in this case, with the adjustments at one point in time, you can see this position was down 187%. However, we finished by going through the adjustment process with, just call it break even. So just under a 3% gain from what was, at least if you would have just stopped following some basic system of whatever, but I mean, you had no chance, right? I mean, the drop was so significant that this position went to 100% loss like that. So there's nothing you could do to overcome that when you put on a position that's that close to something as unusual as COVID. So we could have just taken a $465 loss and walked away. But instead, going through the adjustment process, we ended up making $13. So it doesn't sound like a lot, but it's certainly a whole lot better than losing $465 and just accepting that and saying, okay, well, we were wrong on that one, let's take that and go. So we don't believe in doing that. We work the adjustment process, and for those of you that are new subscribers, I've encouraged you, I've had several of you that have emailed me, and that's one thing that I want to note in this webinar is for those of you that may be considering becoming a subscriber, we have a wonderful support staff. They're actually on tonight. They can answer any questions that you may have regarding subscriptions, etc. But you also have the ability to send any questions directly to me. And some people have gone on and they've had questions about our adjustment process and sometimes the time that it takes. You can see there's 197 days totally from start to finish. But let me ask you a question. Would you be willing to give 197 days to take a $465 loss and do a $13 profit? I think most people would say yeah. But throughout the course of that time, you know, it's difficult to watch the position be to the downside. But again, you work the process, and that's how you end up becoming successful over time. Most people don't have the patience to do that, and that's why they're not as successful as they could be. People are too quick to pull the trigger on both profits and losses. A couple other ones that we have closed since last week that I wanted to show you. So that was one, and then BYND, these were two that were closed on the 31st of August. You can see this one and moved to the downside and with our dot plot. And for those of you that may not be familiar with this, we talked about the transparency. We do a mark-to-market on our account every single day on every single trade. Who is doing that? Somebody tell me who else out there shows that on every single trade, on every single day. I'm not aware of anybody that is this transparent, but we're trying to educate people and help people earn money in their accounts while they learn and be able to eventually do this on their own. But there you can see there was the movement to the upside there. Again, a position that was at a loss at some point in time. If you're going to trade options, the majority of the time, you're going to see, except for rare cases when they jump to the upside. We've had a couple of those lately, but that doesn't happen very often because of time decay and other things. Positions show a loss. And you can take a whole bunch of small losses and slowly just bleed your account to zero. And that's what a lot of people do. They're too quick to pull the trigger on taking losses, and they take a ton of little losses. They feel good at the time because, the trade was going down, the account was going down, so I pulled the trigger quick, and I was really good about, closing that loss out before it got to be too big. Well, guess what? A whole bunch of little losses is the same thing as one or two big losses. So again, find a system you believe in and trust it. And so that one was down 22% and ended up at a 44% gain. And I wanted to show you this chart because I think this is a good learning experience here. Here was the chart on the exit. You can see the chart on the entry too. So we had a descending triangle here, clearly a major point of support right there at 120, highly volatile stock with Beyond Meat. And over here, this big bar to the upside here that occurred on the 29th of August was when they announced that, and it's crazy because you have this whole sideways, I call it the launch pad effect. A lot of people have commented about that. I live on the Space Coast in Florida. When you have something that goes so sideways like this, quite often you get a blast off. And that's what happened with Beyond Meat. Sideways, 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 boom. And that was because they announced, and who knows what the reason is going to be in general, but they announced that they're going to be selling basically direct to consumer. So it's not like you have to go to a fast food restaurant or whatever to get products made with Beyond Meat, artificial red meat, if you will. And so that blasted the upside, but it was quick. The high was hit. And usually when something like that happens, you get another shot at it. The next day, we moved to the downside. It looked like, oh, gee, maybe you missed it. But then the following day was the move that you expect, and we closed it out on the high, which we wouldn't even have an opportunity on. It just didn't last long enough at the high of the day on the 29th. But then we were able on the 31st to go ahead and take that and close it out. Now, with this large descending triangle and the break to the upside, is there a chance that this blows higher? Well, we're going to watch it. It hasn't had the triangular breakout where you've had a follow-through day yet. So we've had an up day, down day, an up day, and a down day. So we happen to catch the right up day to generate a really nice gain in the position. So in this, we returned 44% in 13 days. And at this point in time, with that kind of stock, that's a nice profit to take. $212 in 13 days is a really nice gain. And then also on the 31st, we closed out one that was just a little bit longer, but it was on FAST. So this is part of that 11 trades in a row that were profitable. We talked, that's pretty good. I mean, if you think about it, 11 profitable trades in a row. So here was the entry back on July 30th. So this one was 31 days. So this one took a month. So here was the entry. And this one, we followed the Elliott wave rule of follow the highest degree, which is if you're slightly confused on the daily chart, or if you're wondering if you have confirmation, look at the weekly chart. So here we had a wave 5 that was moving to the upside, but the question was, there really wasn't a pullback. The wave 4 retraced 29%. Now the reason that's labeled is because technically 23.6% is a Fibonacci corrective level. But Elliott himself likes the 38.2% correction. So even though technically from the algorithm that counts, you look at the preferences. We talk a lot in our Elliott Wave educational classes for our subscribers about rules versus guidelines. What's a hard, fast rule? What's a guideline? What are things that you watch for that happen a lot of time? What's a rule that means, okay, now we're qualified or now we're disqualified? That's the hard, fast rules. Well, one of the things that Elliott liked was he preferred a 38.2% correction. Well, we hadn't had that. And so that's when we go, okay, we could be setting up for a corrective move at some point in time that's deeper than this 29%. But you take a look at the weekly chart and it says, you're in a wave 3 to the upside on the weekly chart. And the DMI on the weekly chart was showing good. So you can see the signals here was like, okay, the wave 5 is going to continue, and there's still going to be a correction here at some point in time that's more significant than 29%. There's going to be at least a 38% correction in this stock. You just don't know when it is, but the weekly chart is telling you not in the very near future. So that gave us the go ahead to send this out as an alert to our subscribers, and then we close this one out on the 31st. As you can see here from the chart, we had that sideways move. Remember that launch pad effect that I talked about, but not really the blast off. So this is unusual. This is very unusual to see this kind of a sideways consolidation, that launch pad effect that I call it, without the blast off, just kind of a move to the upside. And then we come down and love the DMI. I love the DMI indicator. I think it's a fantastic indicator. It's an amazing confirming indicator along with Elliott Wave, but it's a tad bit lagging, which is one of the reasons that the CCI, for those of you that watched our TradeScan web series where we went through and talked about all of the indicators that are within our technical trading system, you learn that the reason that we have CCI is it is far more responsive, much quicker to move. You can see by all these little bumps here how much quicker it is to respond to what's going on in the market. And an important factor of the CCI is history. So you go back and look at these historical tops, and we had broken that. So based on the CCI is saying, hey, you're kind of getting into overbought territory. That's not a good thing when you haven't had the blast off yet. We would have expected that with the blast off effect. So with all those things considered, it's like, all right, let's take the gain. So that's another 30+% gain in a month. Not as fun maybe as the BYND, but these trades are in different portfolios. The BYND was in the volatility. This is in the impulse. So we're having different portfolios here, and then you can see here's the dot plot of the position here for the profit on FAST. This is what I was talking about as far as it's nice when it's like this, where you have profit the whole time. They aren't always like this. Most of the time there's a loss at some point in time, but in this case, it stayed above the zero line. It feels a lot better from a psychological standpoint when it's like that. It just doesn't always work that way. So that's a rundown of the closed case studies that we've done for our subscribers on Elliott Wave Options, ewotrader.com, ewotrader.com, if you haven't visited that yet. And so here we are back to the market. So now let's take a look at the case studies that we had talked about last week. We had Texas Instruments, and look at that move, especially in today's trade. Big move, and now the wave 5 is at 60% extension, so we know what's looming there, the 61.8% fib level. So looking at the DMI, not quite as severe as the market is concerned, but boy, we're looking a little bit, or HD, but we're looking just a little bit overbought here, which is a problem when the ADX hasn't hit 40 yet. This is a signal when the ADX breaks above the positive directional indicator and the ADX is above 40, that's when it's a real wholesale signal that, hey, strongest part of the move is over. So at this point in time, there is a possibility that the positive directional indicator gets above the ADX and gives more room for the ADX to get above 40. So there's a potential for this to continue to move higher, but this is again is the yellow flags, the warning signs, and we're trading at 144.96. And if we go back to last week, we were at 141.66. So from 141 to 144, it's been a $3 move. Not a huge move, but definitely a profitable position, which continues our run with TradeFinder. For those of you that have been watching for a number of months, with all of the case study considerations that we've done, we've yet to have a loser. Not once. That's pretty freaking amazing too. And then the other one was booking. Now this one blew me away because I was shocked that the options weren't more liquid here, because this was the absorption of the old Priceline. You've wondered where Priceline went. There was bookings.com and there was Priceline, and they were competitors, and so now it's just bookings. And so here's where we are today. It's up $18 today, so we're trading at 19.28. This one hasn't done a whole lot, I don't think, since last week. Well, a little bit. 18.53 last week to 70 points. I guess that's pretty nice, but it doesn't matter, because when we looked at it, we were just kind of keeping an eye on it just to see what the chart did. Look at this one also, 63% wave 5 extension, what we just talked about with Texas Instruments hitting 60%, and then you have bookings hitting 63, which is also right at the 61.8, and what happened the next day? Bounced down $34, almost $35 the next day, back up 18 today, but it shows you how these Fibonacci levels act as support and resistance, and how the quote machines are programmed with those levels, so you really need to know where they are. That's the thing that we really focus on educating our subscribers, is what are the guys that have the technical, the automated systems, they jokingly call, not jokingly, but the algorithms that they call them machines, the automated trading. What are they looking for as far as their buys and sells? And they're really programmed into Fibonacci levels, so you need to know where they are. So 70 points since last week. It's immaterial. Just wanted to show you the chart just to see what the technicals were, but there wasn't enough liquidity in the options to do anything, so we let that go. Now maybe somebody in the chat can help me with this. Because I wrote down from last week, I wrote down KMX, which basically until today hasn't done a lot, and also wrote down Google. Not really sure, because of the signals were, Google was, if we go back and look last week, was this from the previous week? Because that looked pretty good. And last week we were at 1605, and this week we're at 1655, so that's a 50-point move there. And then CarMax last week, 107 and currently 108. So CarMax basically hasn't moved. And we look at the DMI, and that looks very much overbought. So I'm confused as to why when we looked at this one, unless it was from the consolidation scan, because it's this dead sideways here. But it's starting to look like, it's starting to give that appearance of the launchpad type of effect, especially with today's move. So tomorrow's move would be interesting, but this is super worrisome here. That's a big divergence between where the ADX is and the positive directional indicator, especially with the ADX approaching 50. So this, I think, could be very much a head fake, especially with the market. The futures have dropped down a little bit, still up 7 points, but hitting that 362 level is only 10 points away. Who would have thought that back over here when we were dropping in March? Who would have thought that we would be heading towards that level in August, September? But the weird thing was in the outlook, this is the time frame that we said that 346/347 level was going to be hit. At least that's what it showed at the time. And it's just amazing. All you can do is shake your head. So lots of good questions. And so that's why I don't like to answer questions until the end, because it distracts me. But I can see there's some good questions that we want to get to. So again, from what we looked at last week, has performed pretty well. I think we want to start to be a little careful here with the market that close to hitting a significant level. Doesn't mean that it has to just turn right on that 362 point. Could we go a little bit above it? But I think we're nearing a point now where you want to start pricing in some protection. Now, on the other side of the coin, before we start looking for case studies today, on the other side of the coin, if you are bullish and you're looking for reasons for the market to go higher, this is it. The VIX is still elevated. We've come down here. Now, here's a worrisome thing, is that kind of looks like the launchpad effect too, with all that sideways stuff there. And are we starting the blast off process here? But it's fascinating to me that the market is moving to the upside like this, and yet we have building pressure in the VIX. Something is going to give. This will not stay this way. We will not continue to climb like that in that kind of a vertical motion, well above the 40, what is that, 65 degrees maybe, but above 45 degrees with an ADX like that and a VIX moving to the upside. One of those two is going to change. Either the market's going to come down or the VIX is going to come down, but this will not continue. It just doesn't for very long. And I think you just want to be really, really careful here. And if the VIX does do one of those blast off things, that could be where that correction comes. It's hard to say that we would get to 352 and correct before we actually got to at least 360, the 362 range. Normally, I know people will say, well, if you go back and look at a super cycle where we're going back decades, and then you say, okay, you got within 10 points of the target, that's pretty darn good. And that would be hard to argue with. But normally those levels do get touched. They usually actually get touched. So it's difficult to imagine 362 not getting touched at this point in time. But we'll just have to wait and see. The next few days to a week are going to tell us an awful lot. But I'm highly encouraging people to start to be careful. If you've got a lot of long positions on, if you're doing well, you might want to consider taking some gains or at least putting some protection on. And that's the problem, isn't it? Because with the VIX becoming elevated, puts aren't so cheap. You would think that with the market moving like that, the VIX would be down in here and the puts would be a lot cheaper. So that's a problem. which means that with this kind of a scenario, with the VIX at 26, with the market running like that, just unusual is the word that fits the scenario. Maybe you want to consider a put spread instead of just buying straight puts on the market, because if the market corrects but doesn't correct quickly, they can suck that volatility right back out. The VIX can kind of slowly drift down, even if the market is going down. If the market doesn't go down hard, it's just like, okay, we've hit a resistance point and we start to drift lower for a while, and your puts can not do well. So maybe at this point in time, a put spread might be something to consider. We'll see what happens tomorrow. Again, the futures are up right now, and the VIX futures are kind of flat at this point in time from the close, so not giving us much of an indication there. But anyway, please note that on September 1st, we started after riding this this bullish move, starting to get just a touch cautious here on where we may go. We also have a position here, just to alert you, that our subscribers have. That is one of our strangles, and you can see that it had a pretty significant down day. So that's the beauty of having the strangles, is that if you look like you're moving to the upside, but then you break hard lower and you have a big move to the downside, that's what protected us and protected our overall portfolio through that big drop. When you had the reversal from, we had a lot of bullish positions in our impulse strategy, the market drops big. Well, obviously those bullish positions aren't doing so well, but there's a long put in every single position on the volatility strategy. Those did extremely well, offset the loss in the directional until we turned things around and started trading to the downside with that move. But I wanted to show you that because that one's actually starting to do well with a downward move, which is a bit different than what's been occurring for the past couple of months with this upward move in the market. So let's go ahead and see if we can find something that looks interesting today. So remember, we come over here and we hit pre-computed scans, and we're still on yesterday's update. Notice this. I find this to be fascinating. If you watched last week, this at one time, the consolidating stocks was up over 300. And then we dropped down to last week, if you remember, there was 30. Now we're back up to 133. So what is that telling you? That all of a sudden, a lot of stocks have gone from moving directionally to consolidating. Now remember, just because they're in the consolidating stocks, based on the criteria that are created to find triangle patterns, you can also find dead sideways patterns. So it doesn't mean that these are all in nice triangle patterns. Some of them could be just going dead sideways. But when you jump 100 stocks in a week, that's telling you something significant is happening in the market. I don't think we went down 100 when we went from 300 down to 30. It was kind of a gradual drop. Maybe we did on one of the weeks, but that's fascinating to me. And look at the number of corrective stocks. 6 is a lot that shows up in the corrective search, and on the impulse, only 2. Now, isn't that amazing? With the market doing that, and then we come here and look and see that the numbers are that low, you have to pay attention. Those are things that you can't ignore. When you're seeing those things, it's telling you, it's glaring at you that, hey, be careful, be careful, be careful. And you ignore it, and then you go back and look and say, gee, all the warning signs are there, and I just ignored it. Don't ignore them. Let's see. We've been doing this lately where we've been running the consolidated search against the wave 4 buy one, just to see if we could find one of Elliott's favorite patterns, which was a directional trend move that had a consolidation pattern in it. And I don't know that any of these are going to be of interest. Yeah, see that That's not the consolidation we want. That's not a triangle. That's dead sideways. That's what the consolidating search will find those. It'll find the sideways patterns here. A bit of a descending triangle. If you look here, it's not really a very good one. Doesn't have a lot of points to it. So it's not too exciting either. And then Unilever. See, this is very interesting. A little bit of the launchpad effect, but based on the DMI, it's hard to get too excited about that. So none of those really look very attractive to me. So let's forget that. But what I would like to look at is the corrective stocks. The fact that we have so many of those. See if we can maybe find one that might be setting up early for a potential significant move lower. Now, Rent-A-Center, you would think if we get a significant move down in the market and things start to look rough again, that this would be something that would hang in there and do well. When you Rent-A-Center, economy's rough kind of thing, they normally would do well. And there you can see the breakdown. Now this time the launchpad effect broke, but it's to the downside. So similar thing. I usually talk about the rockets going to the upside from the launchpad, but basically what it means is you get a blast move in either direction. And here we had a pretty significant downward move. It just surprises me from a fundamental standpoint, which is why I just can't trade fundamentals. Use them as a supporting indicator, but not as a primary indicator. And with this move, 57% extension means that the previous floor would be your target price. The ADX, here's where the issue is that we look at the CCI, look at that CCI diving to the downside on the move. So that gives you a good indication of what I was talking about as far as how much more responsive the CCI is to a day-to-day change in a stock versus the DMI takes a little while. It's more like turning a big ship. You know, it gets it done, but it takes a little time. So you want something that's a little more short term. And with this diving down, we're not quite, but getting to a point of a previous significant low. So there is some room for it to continue to go lower. Even though that was a pretty big move for this stock, 3.6% move, $1.14 on a $30 stock. That's a pretty significant move. It just surprises me. Hard to fathom that one from a fundamental standpoint. But you trust the charts, and that's what we do. So that's interesting. I don't know what the options look like on RCII. I mean, I'd be okay with looking at another bullish one for this week until we hit 362, but then you'd have to really twist my arm at that point in time to put another bullish position on. There's not a lot of open interest there. The spreads aren't that wide, surprisingly, considering the fact that the open interest is a little bit lower. I don't know. Let's move on. I was just curious about that one. Rover Technologies, which I'm not familiar with this one at all. This company, I mean, moving to the downside, we broke through the DMA, displaced moving average. That's what that line is. By the way, the displaced moving average that we've talked about, 71% extension. So once again, the target would be the previous floor, which makes a lot of sense here because that was a major point of support resistance. ADX diving down, just as it was with the Rent-A-Center one, with the negative directional indicator taking over, saying that the sellers, let's look at volume on this one, just out of curiosity. And look at that, see, pretty significant move in volume. Let's see if that happened here. Not quite as much, but an increase in volume, not as significant as Rent-A-Center, but enough to pay attention to. I know nothing about this, so I don't know what these options look like. Well, that's why. There's just almost no open interest. So let's go with Skyline Champion. Look at this DMI here. See how the ADX has gotten lower? Really would like to see the ADX get down to 20 and then start curling back up on a downward move. I like that whether it's a downward move or an upward move, and a clear crossover here, more distinct than either of the other two, between the negative directional indicator taking over the positive, 68% wave 5 extension. So again, previous 4 would be your target price. So somewhere around the 22, 23 range. Look at the volume. Hasn't made it to average yet, but that one looks pretty interesting. So far, that looks the best, but again, I don't really know this company, so yeah. I've been doing this for 25 years, so usually if I'm not super familiar with the company, they're not very liquid, and there's no options here either. Well, that's being sarcastic. There are options. There's very little liquidity. Here we go with FMC. Now I know this one will have some liquidity, and of course, the chart isn't quite as good, although we are breaking that level. The interesting thing about this is the size of the potential move. With a 79% wave 5 extension, trading at 106 right now, target would be around 88, and negative directional indicator breaking up, ADX breaking to the downside. I wish this stock was one of those other charts, because this one's going to have better liquidity. Pretty sure I've traded this one before, so well, it's not a ton, but it's better. I mean, at least there's enough activity to put a trade on. Spreads aren't super wide. This one is tradable. I don't know. Let's see if we can find something better before we were to choose that as our. Polaris is one that I can't wait to look at, but now this is the new best chart. Let's cross our fingers that there's good liquidity here. Look at this. So we're moving down. We had a significant break today, starting to gain a little bit of volume. Not great on the volume yet, but starting to add up a little bit. Significant break here between the two directional indicators, negative really taking over. Now the ADX is below 20, and it looks like maybe it's starting to think about breaking back to the upside. So I like the fact that it's already below 20 as far as building a trend back, trading at 22. So it's not a high dollar stock, but that doesn't matter. We've shown our subscribers that you can still make good gains on lower priced stocks. They don't have to be Amazon and Netflix, Google, and all those to make good returns on. But I love that wave 5 right at 61.8% fib extension. This is the best so far. So we'll see if we have any options here. MTOR. And then one more, and we'll. Well, the interesting thing here is there's some liquidity, but it's all focused on particular strikes. There's, in general terms, not a ton of liquidity, but there's a lot of contracts on just specific strikes. Very weird. It's like there's a few players, but they're big players, is kind of what that equates to. November options, you can't really do the delta that I would like. October is really not a lot of liquidity in there. But the November 25 strike, 52 delta. So on the put side, we'd be looking at there's more liquidity on the call side than there is on the put side. Well, it's better if you go out to December. So what we need to do is go out to December. Hate to go quite that far on a downside trade, but maybe the market creeps up for a bit, but the open interest is better in December on the put side. It's better all the way around on both the calls and the puts in December. Very weird. That's odd. People looking way in advance, but that one I really like. So I like that chart, but this is the one I've been dying to look at because this one to me makes sense because Polaris is like the what word I'm trying to look for, the entertainment vehicle like four-wheelers and stuff like that, jet skis, things like that is what Polaris makes. So these are kind of toys, if you will. So you would think that if we're going to have another downturn in the market, that these kind of expenses would wane a bit as people become a little bit more spend conscious. Not as big a move as I would have liked though. 101 down to 90. So it's only a 10-point move. That's disappointing. The ADX is below 20, which is good. Diving down a little bit more than that other trade on MTOR, but definite crossover there with the negative directional indicator. I really wanted this one to look better than it does. We do have a gap that hasn't been filled yet, which is interesting too, as far as continuing lower. Again, the volume has picked up on a couple of these over the past couple of days. It hasn't gotten big yet, but maybe people are just starting to slowly get out of some of these kinds of stocks. So discretionary is the word that I was looking for before. This is stuff that you buy with discretionary income and the things that you tighten the belt on when maybe the market starts to turn a bit. But options are going to have to be really good to offset that other one. Well, this one doesn't have November options, and October doesn't have any liquidity. So in both cases, we would have to go out to December to find any sort of liquidity on the put side. And it's weird, either with a super low delta, some people are betting that this is going to really drop either that or they sold those puts, which is possible. Gee, there's some decent premium there, though. That would be a bold move to go that far out, selling puts. But I think that this is one, it's a good opportunity to look. We might be a week or two early on really focusing on the downside, but I'm going to say that's our case study consideration for this week, and let's see how it plays out. MTOR, and pretty much have to go out to December to find any sort of liquidity to the downside. But as far as right now, with where we are, that's as good a looking downside chart as you're going to find. All right, let's see a few questions here, and then we'll wrap things up. I'm going to check UPS. We looked at that one a couple times. And Tesla. Every week we look at Tesla. And we talked about, I think we looked at this last week. But UPS, the whole Amazon phenomenon, etc. All of the, but this is sky high here. Very difficult to go long this stock right now with an ADX above 70. Just very difficult. Maybe it goes higher, and if you're long the stock, hopefully you do well and you make money, and it is going dead sideways here, which means that something's about to happen, that launchpad effect that I talk about. But it's just, I could never send this out to our subscribers as a long trade with an ADX at 70. Just can't do it. Up till this point, it's a great looking chart. Heck of a run, but there's just no way. And then I'm sure a lot of people want to see Tesla, so we'll take a look at it. Post split, doesn't seem to affect the stock. Still powering higher, which is fascinating because usually that squelches things a bit, but the whole idea of splitting your stock is so that you bring the price down to give more people an opportunity to get in. Seems to be exactly what happened with Tesla. So you can see this big move here to the upside on the 31st. Yesterday and then today came back down a little bit, but $55 plus. That's amazing to me. And even this one doesn't have an ADX as high as UPS, which that's fascinating, isn't it? With the kind of move that Tesla has, the ADX hasn't gotten as high as UPS. Just saying that you would think that Tesla is a more volatile stock than UPS is. But getting a little bit overbought here. I mean, we're above 50. And in this case, today's move was probably from the separation that yesterday created above the 10-day moving average. You can see with yesterday's big move, a little bit of separation there from the 10-day moving average. So we're getting a little bit overbought. So today, just kind of bringing that in line. We might even have another day like that. I just think that I'm amazed. What this tells you that, well, see what happens when you split a stock more than 2 to 1. Usually what people do that hold the stock, they'll sell some of it off. Like if there's a 4 to 1 split, so you have 4 shares for every 1 you had before, quite often people they'll take the gains on 2. So they'll sell 2 shares off, take the profits on those and hold the other 2. But when you see this kind of a movement, people aren't doing that, which is amazing to me, really. So people are expecting this to continue to, if you don't do that, you're expecting it to continue higher. And, you know, this is the exact opposite of what you usually see with volume. Here you have well above average volume on the up day, still decent volume, but less on the down day. People absolutely love this stock. It's fascinating to watch from a trading standpoint. But again, having an ADX above 50, you know, the stock could take a move. It could easily, at some point in time, correct back down here without much problem. And I think if the market does correct, that's exactly what's going to happen. I think this part of the move will get retraced here, and it kind of falls right in line with where that wave 4 forecast is. Things don't go up forever. They just don't. And the higher we go, and this is another one of the rocket analogies that I utilize, space analogies, is the higher you go up, the thinner the air gets, right? And so the more ripe you are to fall back down, and that's what I think is getting close to happening with Tesla as well. Work in AXP, I will cover those in our updates for our subscribers. Ricardo asks, how big of a correction could we be looking for after the wave 5 ends? Well, that's a really good question, and I'd love to have the answer for that. Just like when you're looking for a wave 3 to end, and that becomes difficult without a zigzag. If there's a zigzag in a wave 3, much easier to figure that out. Love trading wave 3s when there's a zigzag in a wave 3 because you have a much better idea. So you've got the directional bias of a zigzag pattern, and you have the strength of a wave 3. Really, really good pattern to trade and feel a little bit more confident on where it may end. When you have a wave 3 without a zigzag, far more difficult to figure out where the wave 4 correction is going to be. And in this case, I don't think it's so much worrying about when this wave 5 is going to end, is going back again to that wave 3 super cycle that's decades old. I think that's the more important level, and who knows? It sounds weird to say hopefully, but from a trading standpoint, you'd like to see a 38% correction. It may only be 23. Maybe we come out, pardon me, come down to 23 and bounce and then head back up to 38. Or down, I should say, to a 38% correction. Apologize for the coughing, I know that's annoying. Goodness. It's a dry cough. It's not COVID. It's allergies. So sorry. PayPal, PYPL. We looked at this one. When did we look at this one? We didn't select it, but I know we looked at it on one of our searches. Powering to the upside. Well, good question, Julianne. Very good question. Because now here, goes in line with what I was just talking about. This is the really interesting dichotomy that occurs with Elliott wave trading. So you've got a wave 3 with no zigzag, just a powered wave 3, but it's been a 45-degree angle, which I love. I wish there was a zigzag pattern so that I felt better about knowing when this wave 3 is going to end. But then you come down here and you look at the DMI, and the ADX is moving up. It hasn't gotten to 40 yet, so still plenty of room to run, and it's underneath the positive directional indicator, which is also going up, and a decent update today. So nothing at this point in time right now to signal that that may be ready to reverse. And in a point in time where you're getting very nervous about putting on upside positions, or you should be getting very nervous about putting on upside positions, that's a good looking chart, and that's as good as anything that you're going to find, I think, due to the fact that it's just that steady increase on the 45-degree angle. The only thing that's missing to me is a zigzag to give us a better indication of where we may run into resistance. But the DMI is, let's look at the CCI so we see a little more short. There's even room to run there too. So remember that nothing's 100%, there's no guarantees, but that looks really good for someone that is interested in looking at something long. All right, so we're well past the 10 o'clock hour, and apparently my throat is saying that enough is enough for tonight. Sincerely apologize if I haven't gotten to your questions. I know that there was a lot of them, touched on the main points. Obviously, some of you are subscribers, because I can tell you're asking questions about current alerts, and I'll get to those in the video updates that we do. For those of you that aren't familiar, we do video updates on our alerts for our subscribers. So we'll cover those in the video update. So thank you so much for your attention. Hope you've had a wonderful week, and I look forward to talking to you again next week. Take care, everybody.